welcome everyone to the Farms.com Risk Management Live webinar where we're going to do a pre-report. This is a special webinar, actually. We're going to do a pre-report review of the 2022 July USDA crop report, but we're also going to do some top observations from the 11th 2022 U.S. Corn Belt Crop Tour. We got also some guests on today. There's two sponsors to our tour this year, Case IH. Thank you, Case IH, for a sponsor, as well as Advanced Forecasting and Dr. Simon Atkins. We got Mark Robson gonna do a quick presentation, 15-minute presentation on Case IH, what's new with Case IH planners, and then I'm gonna take over. I'm gonna do a quick PowerPoint review of all of my top observations from the tour. We'll review how we got to where we are today and what to expect today from the USDA. And then to end the presentation around 11:05, we're going to introduce Advanced Forecasting, Dr. Simon Atkins, and he's going to finish the webinar with a weather outlook as we end the month of July, as we get into August. So thanks for joining us today. Give us a few more minutes, but we'll start shortly. Take care. Oh, by the way, if you want to ask questions, feel free to do so on the Q&A on the Zoom app, and we'll get those answered as well. All right, so everyone, we're going to start with this special webinar. My name's Moe Agostino, Chief Commodity Strategist with Farms.com Risk Management. We're going to be reviewing the USDA July crop report. We're also going to do my top observations from what I've seen through 8 U.S. states so far. And then we're going to start off with one of our sponsors, Case IH. Thank you, Case IH, for sponsoring us this year. But Mark Robson, he's a production, I believe it's a production specialist.
Yes, crop production specialist.
Crop production specialist. So he's going to do about a 15-minute presentation on what's new with Case IH planners. And then I'm going to do about a half an hour presentation, getting you up to speed with what's going on in the marketplace. And then we'll end it with a weather outlook from one of our other sponsors this year, Advanced Forecasting with Dr. Simon Atkins. So Mark, before you go, I'm just gonna, so what you're seeing in front of you is the market. You can see corn's down about 24, 25 cents. You got beans down 37, canola down 26, and wheat's down about 13 to 20 cents. I just want to remind everybody that just give me one sec here. So we've also introduced the Moe Simon Show for the U.S. Crop Tour. We've done 2 webinars. I had him at a producer meeting in Salem, South Dakota yesterday. He's going to be with us on today, and then we're going to do another Moe Simon Show on Thursday, July 14th. So if you want to get an update from the markets and weather, there's the link there, and you can join in. The last one's on July 21st. And then don't forget, if you're a U.S. farmer, you can join our contest. If you guess closest to my final corn and soybean yield that I think the USDA is going to report next January, and the final number. And there's also a price forecast. If you can get closest to the high in December corn, when this tour ends on July 23rd, or the high in beans, you also get to win a prize. The prize package is about $3,900. We got a free subscription for myself, risk management, $700, advanced forecasting, a 3-month subscription worth $3,000. And then Case IH is donating a pail of oil and a pail of transmission oil. So thank you all for that. Let me stop sharing, and Mark, you can take over. Off you go.
Alrighty. Morning, everyone. Just gonna. So everyone sees this big red thing on the page. Just make sure everyone sees what I'm seeing.
Mark, no, I'm not seeing anything. You got to share your screen at the very bottom.
I thought I hit that before I got in here. Sorry.
It's that, there you go. I think you're good now. There you go. Perfect.
All right. I'm Mark Robson, crop production specialist for Eastern Canada. So I cover anything going in the ground, whether it's tillage or seed, or what we're protecting on the ground with sprayers and application equipment. This year, Case released a new 2150S planter. So 2150 is kind of our front fold name and model, but the 2150S is a front fold with interplant or different row spacing, like 20-inch rows as well. Big thing with this planter, a lot more weight for the guys looking to no-till. It's a 30 or 40 foot front fold split row or narrow row transport planter. Very narrow transport. It's got all the same 2000 series row unit features, using precision planting, speed tubes, and V-drive and V-set meters, as well as Delta Force, plus Case's integrated wing downforce, so we can transfer that weight, and it's in the cab adjustment. This planter is more for any like a diverse farm operation when they're using it to plant corn, soybeans, some specialty beans that are on the smaller side. But it has the biggest advantage of this planter is its weight to row unit ratio. So everyone talks about downforce and how great hydraulic downforce is, which I'll be the first one to say it's a great feature for a planter. But what downforce also relies on is you actually need the weight on the planter. So if the frame doesn't have the same weight on every spot of the row unit, you can't apply that downforce. With this planter, we're applying all the weight from the bulk fill tanks across that toolbar, and we have very good weight distribution front gang to back gang of the two row unit for the interplants. So you got 24 row 20, 32 row 15, 31 row 15, 24 row, and 23 row 15. So the even row planters are 2-point hitch, but you can also get an offset pinhole on the 2-point hitch, so you can offset it. So if you're really trying to no-till beans in between 30-inch rows, this planter can not only do that, but you can drive the tractor down the same tractor path as the year you planted corn. So the only thing that's going to touch the corn stubble, the way these planters are configured, should be the tires of the planter. So keeping your row units out of the residue, keeping your depth more consistent, and they come standard with narrow gauge wheels. So that is a big plus, because there's a lot better trash flow, and they won't touch the corn stubble as much for standing corn stubble from the year before. So we got 15 degrees up and down wing flex on this planter, a total of 30 degrees plus 8 inches of vertical row unit travel. So up and down of 16 inches, which is industry highest in the industry right now. We have frame distribution system on this. So you have basically hydraulics controlling it. Cool thing with all our 2000 series planters with weight transfer, if you adjust your downforce, you can touch the weight transfer. And if you say you want 200 pounds or 150 pounds of downforce, it'll tell you the actual amount of weight transfer you should be using to keep that weight balanced across the machine. So you don't have to over apply weight to the wings, and you don't have to under apply weight. So if you need 100 pounds of downforce, you apply, it might be 1,000 pounds of wing downforce to keep that weight distributed. So keep that in mind, because that's really important with all these weight distribution systems out there. There should be a mathematical system or a chart that if you're applying this many pounds of force, you need this many pounds of weight transfer. So I don't know if everyone's pitching that, but it's really important, because if you over or under apply that, the downforce of each individual row unit suffers. Big thing Case released for a lot of their 2000 series planters this year was Isobus planter software. So this allows anything 2000 series. You could for most configurations, we are now able to run on the Isobus display on AFS Connect magnums and staggers, running a Pro 1200 display. So our Pro 1200 display is our next gen display across all our OEM tractors that are, 200 plus horse. This integration allows us to have a bit more capability plugging and playing into these tractors without having to put proprietary software on the planter or the tractor going forward. So this is a pretty exciting step. The next page, I'll show you some of the slides of what you're going to see. So you got HD mapping, downforce, your row spacing, as applied maps. And the cool thing with this Isobus software is it's widget based. So we can actually take some of these parts of the Isobus out of the Isobus screen and put that onto some of your run screens. So you can have a customized layout of what you're wanting to see. So that's pretty exciting. And the next phase for this, as you can see, the bottom right screen there is not an Case IH OEM display. That is a different Isobus display. So the next step is validating it for different Gen 4 Isobus displays or whatever, so that we can allow a person to run this planter on his machine with the models he's using. So that's really exciting. We're keeping the cab clutter down, but we're also being able to put that data into their machine so they can still apply or attain the data they're still looking to get out of this planter. That is all I had for the main updates for this year, but probably the most exciting one is this 2150S. Really good for the Midwest. It's should be pretty popular here in Ontario as well, just for its no-till and conventional, hybrid capabilities. Got 525 gallon tank on here for a 40-foot planter. That's pretty significant from the factory. Any questions on the planter?
If anybody has a question, just feel free to use the platform to ask the question. Mark's going to stick around, right, Mark? So,
yep.
What we can, if you got a question for Mark later, as we end the webinar, you can ask later as well. So, Mark, there's no questions at this point, and so we'll move on. Can you stop sharing your screen?
Yep.
All right, perfect. So I'm now going to share mine again. And just to give you a quick update, that's what the market's doing. We're down about 21, 22 on the corn, beans down about 31, 32. So we've recovered a little bit. Let's get into my PowerPoint presentation. And again, if you want to ask questions, feel free to do so. And again, there's the Moe and Simon Show. Simon's going to join us again here today shortly, and then we got another one on the 14th. You can sign up for that. Don't forget about the yield contest. So I've been traveling for a good week and a half or so. I've got about another 2 weeks to go before I end my tour. I'm currently in North Dakota, and so I just wanted to share with some folks my top observations from the tour. And one of the first observations early on was that everybody was complaining about how dry it was. Moe, it's dry, dry, dry. You can see the cracks in the soil from this photo. Sort of had two planting seasons, the early stuff and the later stuff. The later stuff is struggling. It's behind. It was too cool, too wet, some challenges, not for everybody though. Soybeans are short everywhere. And I think the soybeans may have been stalled because of that cool, wet weather that a lot of people experienced so far this year. But it doesn't mean that they can't come along and eventually still outproduce. Still a huge growing season ahead. And you'll hear Simon later talk about the cool, wet weather for August. So, and there's some moisture coming in August, and that could save the bean crop, as everybody knows. Lots of curling in pineapple corn, more than any other year. I've seen fields where the entire field is pineapple or corn. but it depends on the day and it depends on the time I travel. Because if they just, it looks awesome. If it's really, really dry and there's maybe a lack of soil moisture at the root zone. But it seems like every time every time I leave a farmer's site, they seem to get rain. So it's almost, yes, it's drier than last year, but it doesn't remind me of 12, doesn't remind me of 83 or 88. It is a drier pattern, particularly for the Western Corn Belt. There's some areas in the east that are dry. So Central Illinois, Urbana, Champaign, Illinois were dry. But the minute I left, they got a storm and they got 1 to 3 inches. So overall, I'm not seeing a threat to crops because there's a threat in the next 2 weeks where that heat, it's hotter and drier, but we're missing that extreme heat, that 105, 110, 113. It stays in the southern and central plains into Texas. It doesn't quite come up. I'm not saying that that's not going to happen down the road, because we talk about the 89-year drought cycle and peaking in 2025, 70% chance. It comes from Texas. So that extreme heat you're seeing in Texas this year eventually is going to move north and east, but it slowly will do it over the next 2 to 3 years, expected to peak sometime in 2025. So you can see some beans here, some corn. Not all the beans are looking like that. Those are pretty awesome beans. So that Western Illinois is really the garden spot. Western Missouri, also the garden spot. Let me just go back and say one last thing. I'm hearing stories of pollination issues in Missouri, southern Indiana, southern Kansas, where something went wrong. And I haven't traveled through Minnesota and Iowa, where they do most likely have ears. So I'm going to be testing those ears as I travel through those states again. But for now, I don't think it's a big issue. Now, have a look at this chart. So the USDA is at 177. That was last year to the right, and the east is pretty normal. But look at the 177 this year and look at the east, it's pretty dry. So some are questioning whether we can achieve a 177. I believe because of the war in Ukraine, the global food shortage situation, the USDA is going to report a 181 today. Again, I know it's drier than normal, but I've made a mistake the last 5 years thinking that weather's doing some damage, but these genetics and technology have come a long way. The hybrids are so good that you can produce more with less. So we'll find out what happens today. Unfortunately, the funds have moved away from that inflation trade we've been talking about for many months now, and they've replaced it with the deflation or stagflation. Stagflation is where you get slower growth, you get sticky inflation, and you get higher interest rates. Inflation's positive commodities, but when the funds are now thinking global recession, lower demand, especially ag demand, it can be very negative for commodity prices. And that's why you've seen a peak through April, and now we're slowly starting to move lower. Unfortunately, the market has forgotten about Ukraine. It doesn't even, well, I'm not saying it doesn't show up in the headlines, but they're not discounting any of the issues there. It's still a wild card. I think there's 75 million metric tons of grain that won't find a home this fall. Some of it has to stay in the fields for storage. And so the 23 crop becomes in jeopardy because I don't know how these guys are going to get paid. So I think at some point we got to come back to this wild card. But for now, nothing matters except that global recession, that fear that ag demand is going to get destroyed like 2008. 2008, corn went from $8 to $2.90. This is the latest from Russia, where Russia is basically burning wheat fields. It's just crazy. I don't understand why we're allowing that to happen, but it is what it is. So this is that new global inflation fear trade. And you can see some of the negative GDP growth over the past many years. I'm not in that camp that says we're going to get a hard landing, but unfortunately, I think the government started this with lockdowns in March of 2020. We have a global supply chain issue now, and now they're going to make it worse with higher interest rates. Unfortunately, they never get it right. Every time they intervene, they make it worse. They should have left us alone. This is copper. So copper price is a good barometer of a global economy because it's used in a lot of things that we make, and you can see that it's fallen from the highs. And then this is December corn in 2008, peaked June 27th around 7.99, went to 2.90 by December 5th. Here's my issue is the funds. And if you look at this dotted line, blue line, they were long 350 to 400,000 contracts. They're now long 100,000. And you can see in 18-19, they went minus 340,000. If they decide, and they're very worried, and this is all about market psychology and perception of what's going to happen in the next 6 months, they could easily short 300, 400, 500,000. And with December corn at $6, I can't rule out that they knock this thing down to 4, and they'll overdo it. They'll overshoot the downside like they overshot the top side. And for that reason, we need to manage that risk. So we've sold most of our 21. We got maybe 15% left as play bushels in the event that weather becomes a problem, but I don't think it will. And then we've sold 50% of new crop 22. We got to get through this period of flushing from the funds, this negative global growth trade. We'll find a bottom, a harvest low sometime in the next 2 to 4 months, and then we'll recover from there. Again, they've added a weather threat over the next 2 weeks, but again, I don't think it's hot enough. I don't think it's dry enough to do a lot of damage. This is crude oil. Looks like a top to me. If you look at this chart here, this is the left shoulder. There's the head. There's the right shoulder. That's a head and shoulders top formation. You can draw the support around 100. It's breaking 100 again today. It depends on the day. If the funds are worried about tight supplies, it's up. If they're worried about global demand and gas demand, it's down. If it breaks 100, it goes to 92. If it breaks 92, it goes to 62. I think we got to get past the summer driving season, and I think that's when we break to 62. So we've said to stop buying your feed, stop buying the fuel and the fertilizer, because if we're headed lower, all of that will come down, including diesel, and that will give you a better pricing opportunity for next year. Record exports, strong demand, lower stocks and storage has caused natural gas to just explode. But again, it got ahead of itself. We're now breaking lower. Usually you get an opportunity to buy this in August. So if you're looking to maybe manage a hog barn or dry some corn, I don't know if we'll get down into that $3 range, but I'm looking for much lower prices before I start booking. So give it some time. Fertilizer prices have soared like they did in 08, slowly starting to come off, a little bit of a break from residual supply from 22 in the last month. And if corn's going to 4, fertilizer may go with it. But remember, the drop is usually slower. We take the elevator up, we take the stairs down, unfortunately. So, we'd give it a couple more months and see where the price of corn ends up, and keep an eye on that fertilizer price. US dollar index breaking out to the top side. It's the only safe haven on the island now. I thought it was commodities and the US dollar, but they've decided to sell those commodities as well. So in times of uncertainty, investors are going to buy that US dollar because it's broken 108, trading towards 105, because it's breaking 105, now trading 108, it could go to 112. I'm also concerned with the August report. So I think USDA is going to report a 181 yield today, go to 183 on corn in August, but I'm concerned they're going to find phantom acres that were unaccounted for in the June survey, 4 million plus in corn, 15.8 million in beans. And so, 89.9 on corn becomes 91, 88.3 on beans becomes 90 or 91. It's game over. If those two reports, if the USDA is not being your friend, they'll continue to sell this. So for today's report, we're looking at basically kicking the can down the road at 177 on the corn yield, 51.5 on the beans. So we'll see what happens here today. They'll incorporate some of those acreage changes from the June acreage. You can see there 88.3. If I lower the yield to 50.5 and I just demand lower because we're in the global recession and egg demand is missing, and the big gorilla, China, is missing in action. They haven't been buying corn or beans for some time. I think they're waging a quiet war against the US. They're trying to make the US weak with those lockdowns because US has a lot of plants in Shanghai, Tesla and iPhone and Apple and all that fun stuff. But you can see how tight the fundamentals can get. So, but this doesn't matter right now, because if you don't have ag demand, you don't need the production. At some point it will, but it's going to take time to figure that out. If you add, if you go to 89.9 to 91 on corn acres with, that this is still beans, sorry. So if we go from 88.3 to 91, we increased the yield to 53 and we lowered demand because again, consumers not spending as much. You go from 280 to 510. This is very, very bearish. On corn, 89.9. If I lower the yield to 174.6, but again, I don't think we're going towards that. At this stage, at my best guess is it's a 170, 180. If I lower demand slightly, you're still at the 1445, still a tight situation. But if the USDA goes to 91 with a 180 yield, and I lowered demand, you can see ending stocks go to 2 billion, which is 14.5, and this would be very bearish. I don't think it's going to happen today, but it could happen by the August report. I think the tops in, you can see up here, you got 1, 2, 3, 4 tops. Once you broke the $697, it really just accelerated. Once you hit that 200-day moving average right here, it bottomed, it overshot it. When you connect the dots, you get this downward sloping downtrend. And so what the market tried to do is recover, short covering rally, relief rally to the upper end here. I said 650 to 670, and we hit a high of 667 yesterday, and now we're selling it off again. Once you break this low again, they'll resume the downtrend. And if you connect the dots, this thing is just going to keep going lower, and I can't rule out $4. Same thing with beans. The beans were a little bit more resilient. You can see the several tops here, but each time it comes back, it's a lower high, which is bearish. So this one's lower than this one's lower than this one, and that downtrend just continues. The pattern repeats itself. I've done this for 42 years. This thing's going lower. It started with palm oil. Palm oil was the leader at the beginning of the year. It peaked first, it dropped first, it bottomed first. I don't know if it's bottomed, but it's trying to find a bottom. And it spilled over into everything from bean oil to canola, soybean meal, although it's been a little bit more resilient than some of the others, and including canola. But remember, these prices are still quite high compared to history. If you ever want to know whether wheat's going up or down, follow Matif European wheat futures. You can see that it was the leader at the start of the year, right into that May, and then it peaked and it fell and then spilled over into Chicago. This is September Chicago wheat, and these all have the same pattern. Remember, we're still higher than a year ago. So you got this head and shoulders top formation. There's the left shoulder, there's the right, there's the head support at 1050. Unless this thing can break back above 1050, it's headed lower till we get a post-harvest rally or harvest low. Same thing with Kansas City. There's your head and shoulders top formation. $11 is your support, and then Minneapolis, sort of the same thing. $11 as your, well, it's $11 is your new resistance. And then we've got December cotton. It was in a 2-year bull market, and then finally it just came to an end. And I think this has partly to do with exports, and China has stopped buying some of that cotton from the United States, and it's back into it's broken lower, unfortunately, and it's going to have to recover because the funds have done some damage there. Then we got August hog futures could retest the highs by expiration. So the hogs are common to do that V-shaped bottom or V-shaped top, and you can see that you've had 1, 2, 3 tops here. You draw the support around that 110. Now it's the new resistance at 110, and it could be a delayed seasonal rally here. Typically this time of the year we can see highs, especially for the summer months. So you got the 1, 2, 3 bottom here, trying to break that 110. If it can, it could probably retest the 120, but not sure the fundamentals are strong enough to get up to the 2014 highs in the 130, 135. Then we've got live cattle. It's in an uptrend, looking quite strong on the cattle side, and looking to probably head towards that high in that 140, 145. If you can break that, I think we could head into that 150, 155. We got feeder cattle breaking out to new highs. If it can sustain this breakout, you could see upwards of 200 on the feeder cattle. So, we've had a lot of dry weather, a lot of hot weather, and it's having an impact on the cattle supply. So going forward, we're bullish. I'm a little concerned about the exports because of that global recession. And global recession, lower consumer spending, slower macroeconomic can really dent meat demand, whether it's in the US, Canada, or the rest of the world. So that's a concern. So this is the chart I was referring to. I'm giving you a perspective. Prices are historically still very, very high. So if you look at September corn, which is really the old crop, in 12 for this time of the year, this mid-July, it was 731. Last year it was 545. Right now, 658. Now it's off. Obviously, it's off today, but this was as of a day or two ago. December corn new crop 732 and 12, 533 last year, 649. So don't be afraid to pull the trigger here, folks. Yes, did we leave some money on the table? Perhaps, but it's not about that. It's about managing risk. Remember, we have some high inputs. Now, we were booking inputs last February before this thing took off. So we probably have a lower cost than most do. But nonetheless, I don't want to be underwater. If corn's going back to 4 for whatever reason, because of fear over a global recession, I don't want to ride it all the way up and all the way down. The last 5 days is a gift from the funds. You guys need to take advantage of it. Soybean August futures. So this is old crop. If you got any old crop, 1572. This is futures only, and then plus or minus your basis. We still got about 14 minutes left here. August soybean futures old crop 1572 versus last year 1404, and this year 1535. So almost as high as the 2012 highs. It's unfortunate because we were forecasting $10 corn and $20 bean futures. We almost, honestly, the fundamentals could have driven it there, but for some reason the funds didn't want you guys to make more money. September soybean futures 1545 and 12 versus 1358 last year and 1438 this year. November new crop 1529 and 12, 1350 last year, 1420 this year. Chicago wheat, this is interesting. So in 12, we hit 826. Yes, there were higher highs when India reported that they were putting in a wheat ban that went from a hard to a soft ban. But nonetheless, last year was 641. This is Chicago, September, soft red winter wheat. This year, 866. If you look at the column 2022 across the spectrum for wheat, whether it's Chicago, Kansas, or Minneapolis, all those prices are still higher than 2012. So did we leave some money on the table because the market didn't care about the war in Ukraine anymore? Perhaps, but still relatively really, really high. And I know a lot of guys are busy harvesting wheat. So take advantage of it. We went to 50%. We'll leave 50% on the plate. Again, my concern with 22 is if you know what your wheat bushels are, you can just sell it all and make room for corn and beans if you want to store them. But I'm concerned about not having enough bushels to meet a contract. So I want to avoid buying out contracts. Canola, keep things in perspective on canola. Yes, we had a drought last year. Yes, we reduced production by 50%, but the price, the old record high was 627. Yes, we went to 1200. I think we were all spoiled. And now, back to 863, but it's almost as high as last year at 889. So $20 a bushel canola is still very high historically, and you can make a lot of money selling it there. So yes, some guys did get 30 for, we did sell some, not enough at $30 a bushel, but I'm concerned also with Western Canada because it was very wet, Eastern Saskatchewan, Manitoba. Some areas were too dry. Now those dry areas have turned that wet. There's a forecast that turns wet and cool for August and then frost in that third week of September. Simon will mention that at the end of this webinar. So don't forget, if you're a client, make sure you use that app. We try to keep you informed during the day with the breaking news on the app. And again, if you want to follow us for the tour and all the photos and videos and comments, go to Twitter @Farms Marketing, #CornBelt22. You guys have access to me, so don't be afraid to call me. If you're not a client, sign up for free, try the program. You won't be disappointed. Now, what do we got? So we got about another 11 minutes before the market knows what the USDA is saying. I don't think anything's out yet. So anybody have any questions while we wait? Does anybody have any questions? Does anybody have any questions for Mark from Case IH or myself? You can see the market's down about 22 to 23 cents on corn, down 32. We do have a question from Scott Artis. What are your thoughts on new crop basis? Good question. So didn't really talk about basis, but if you go back to my presentation, you look at that US dollar, and I'm going to just live bring up the Canadian dollar here now. So this is the US dollar. This is your chart, and you can see that it's breaking, almost trying to break that 108, been in an uptrend. This is putting pressure on the Canadian dollar. Now there's other moving factors here from interest rates and all that fun stuff, economy, but this is your Canadian dollar. And, you know, it's kind of been sideways trading, but within the 80 cents to 77 cents. And it's just about to maybe break below that 77 or 76 and a half. And that would be very bullish basis. So if you think that basis can still scream higher, and I think basis will remain hot through the month of July, simply because the trade still doesn't know what the production is going to be yet. In Ontario, Scott, I know you're from Ontario, but in Ontario, the West is good. The West is dry and the East is wet. So, but most of the production comes from the West. And the guys are really saying in the next 2 weeks, my 220, 240 corn becomes 180 if I don't get rain soon. So it doesn't look good, but who knows? Maybe we'll get some timely rains there. So if you're looking, this is new crop basis. So I would be patient on that new crop. If you're looking to hedge something, you could do a futures first, leave the basis open. There's also DP. If you can find somebody does deferred pricing, you leave the basis and the futures open. I'm concerned about that futures. If you don't want to do the physical because you don't like what you see in the field, do some put options, protect yourself here. Prices are quite high historically, and put options do work when prices are considerably higher. Okay, so bullish on basis still, no question. If our old strategy was store and ignore, and now we're sell and protect. But remember, we're there for a short period of time. We turn bullish again in 23. And I think if you get into, at some point, these tight fundamentals will play a role. And if we get into another dry spell as we get into 23, drought's going to make basis scream higher. And of course, also futures. So you got to you don't want to cap the upside too much here. Okay. Any other questions? I think we still got about another 7 minutes to go. So corn is still down 21.22. Let's go have a look at, excuse me, crude oil. And it's down hard today. So the market is really worried. So remember, I said to you that we got that. So if I circle this and then I draw my line, so there's kind of my support at 100. Okay, and now we're breaking below that. Now, just because you break lower for one day doesn't mean the trend's been broken. We need a couple more days to verify it. And, so if you're down again tomorrow and the next day, it's probably going to test this 90. If it breaks 90, you'll break the 200 at 88, and then you're probably headed back down to this level here. Give me 1 second, but probably right about there. It's going to retest this little area going back to December. Going back to December of 2021. That was the last scare, excuse me, because of COVID variant. And so that's what I want you guys to wait for. Let's see if we can get a break back to that because of this global recession and fear. Anybody have any other questions? While we wait, we got about 6 minutes to go here, folks. Sorry about that. I went through my presentation a little bit quick, but I hope everybody got my message that I've gone from being a bull to being a bear. Unfortunately, I cannot sit here and watch this thing go all the way down. I'm really afraid that the funds, we could be limit down here today if the USDA goes to 181. Of course, they may not do that. It would be a surprise if they went lower, but again, because crop conditions have stabilized, so the beans 62%, good to excellent. That was down 1. Corn unchanged. I believe it's 64%. Over the coming weeks, if those crop conditions remain where they are, maybe start to go up, the chances are you're going to see the USDA increase the yield. If those crop conditions continue to fall over time, then there's a possibility of a lower yield. I'm still in that 170, 180 range, but I'm getting more and more convinced with what I'm seeing that it's probably closer to a 175 to 180, maybe as high as 183. So if a majority of the Western Corn Belt can get past this next 2 weeks where everybody's talking about this hot, dry weather, I think the crops are made, to be honest with you, particularly with that cool, wet August period. I'm concerned for Western Canada because if frost does happen, 60 to 70% of Western Canada is delayed from planting, and the frost will be worse than that heat dome last year because the frost will just destroy production. So we'll see what happens in the coming months. We still got about another 4 minutes to go. I'm just gonna go check something out. So the hogs are still, July is breaking above that 110, but July's almost expired, so it doesn't count. And then here's your August hogs here. And so again, it's struggling to break that 110, but we'll give it a little bit more time here. I think the lower feed, lower corn prices is helping the livestock here short term. So any last minute questions before we have a look at the USDA report? All right. Oh, we're almost there. I'm going to go and check out. We're going to look at the changes in demand as well to see if the USDA makes any changes there. So I'm just going to head to that. It's not quite out yet. Never know. Sometimes they may have pushed the wrong button, but we'll wait for that. So still down hard. It's recovered a little bit from the lows earlier this morning. So the problem with the collapse that we've seen here in the last few weeks is it's been on low volume, very little open interest, and that was a concern. And you know, when we came out with the June acreage report, and USDA reported that 2.7 million less soybean acres, which were forecasting, the red flag was when beans closed lower. And on that day, China canceled the cargo of beans, and they canceled some more this past week. That's been the missing link, folks. The market's very concerned about demand, and that's the headwind. It's demand, demand, demand. That's all they're concerned about today. And it's unfortunate because if that demand was still here, I think we could be seeing a different picture overall. But fear's driving this thing at this point, and I'm not sure the USDA is going to be your friend, unfortunately, because of the war in Ukraine, the global food shortage situation. So got a couple more minutes left. Any questions for Mark? Any questions for me? We're almost there, and then we'll summarize here, and we'll pass the torch to Simon from Advanced Forecasting. Don't forget to ask Simon some questions on the weather front. He can make it localized, whether you're from Ontario, United States, or Western Canada. He can give you that weather outlook that you're looking for. Okay, we got about a minute left here. Oh, we do have another question. Is storing corn in 23 a bad idea? No, it's not. Look, we've been storing corn for some time. I mean, I just sold my 66% of 2020 beans, and that played out well. If you believe in my 89-year drought cycle, and you think that Mother Nature is still going to pose a problem, store and ignore longer term will still play. Will provide bigger profits for you. There's no question. So, not a bad idea at all. I've been promoting more storage as we the farmer that's going to win in the end in the 6-year drought cycle, this is the 3rd year, is the farmer that has bushels in the bin. So yeah, you're fine. All right, let's go have a look at what the USDA is saying. So carry out at 1470 for 22-23 corn. Market is looking for 1440, so slightly higher. Not a big deal, probably in line with expectations. Production 14.505. Market is looking for 14.520. We got a yield of 177, so the USDA kicked the can down the road. On the production side for beans, 4.505. Market was looking for 4.530. We got yields of 51.5, kicking the can down the road. Carry out for beans is 230. Market was looking for 211. If we look at what else, we got all wheat production at 1781. The market was looking for 1745. So slightly bearish the beans. 21-22 soybean carryout 215 versus 208. We got Brazil's soybean output for 21-22 at 126 versus 125.9. Lots of numbers coming at us. Let's see what the market's doing. The market still doesn't like the numbers, so we're still down 32 to 33. There are also, and the beans are down 44, and we got wheat selling off again. We've also got the global numbers that you need to pay attention to. So global wheat 22-23 at 267.52. Market was looking at 266.30. What else is there here? I'm still looking for some more global soybeans for 22-23 at 99.61, expected 99.4. And then I'm looking for 22-23 global corn carryout, 312 versus 310. So all three of them are up. That's slightly bearish the market. Let's have a look at what the USDA is saying on the demand side. I'm just going to have a quick peek at the wheat. We'll start off with the wheat, and pretty well a kick the can down the road. There's some slight adjustments here, nothing too big. So we go from 627 to 639. We've got exports up 25. That's a surprise, although maybe we've gained some demand there on the wheat side. Feed left unchanged at 80. We got food up 2, food unchanged. We got imports down about 10. So that's kind of the slight changes in the wheat. And then we got corn, obviously a change in the acres, the yields unchanged. We got feed and residual unchanged. We got ethanol unchanged, exports unchanged. So it's a slight move upward because of the acres. That is all. Okay, just a little bit more production. Again, a kick the can down the road for the USDA. And then we got beans, not really telling us anything, folks. Unfortunately, they're not giving us the right signals, but it is what it is. Acres on beans lower, yield unchanged. So less production, which is that is why we went to 280, from 280 to 230. We've got exports slightly lower, 65 million. Again, I'm not surprised. The export pace is 200 million bushels ahead of the USDA pace, but if we're worried about global recession fears and lower ag demand, then the USDA is going to start to lower that number, and that's why this number, although it's still lower, it could have been a lot lower if that demand was stronger. So that's it from me. Let's have a look at what the markets are doing one more time, and then I'm going to pass the torch to Simon from Advanced Forecasting. We're still down about 25, 26. We've recovered some Beans are still down 37, 39. Wheat's down about 15 to 20. So I'm going to stop sharing now, and I'm going to pass it on to Simon. Simon, how are you?
Yeah, I'm doing great. Yeah, really good. I'm a little cold. Can you see how many layers I've got here? You can probably count like 4 or 5. It's kind of crazy cold down here.
How cold
Down
is,
in good old Uruguay.
how cold is it?
Well, to you guys, I mean, you're going to laugh at me, but the high temperature today is 46 Fahrenheit.
Wow.
But if you've ever been to Europe, right, Mo, and that moist cold just digs through your bones. So even if you weigh, I don't know, 1, 2, 3, 4 layers, you just can't get warm.
Right. Well, you got to come. Well, you should go to Texas at 110. You'll get warmed up.
I think I'd like to put my toes into Texas right now, but not for too long because it's a little darn too hot. So I like something in between.
Right.
Where can you put me?
There you go. So, folks, this is Simon, Dr. Simon Atkins, Advanced Forecasting. We've been doing the Moe Simon Show for the U.S. Crop Tour. I've asked him, I've invited him to join us here today for this special webinar. And so, Simon, you've seen what the USDA basically kicked the can down the road. So,
yeah,
why don't you tell us what weather's going to do? Is weather going to be threatening to these markets?
Yeah, well, that's actually, we read off of each other. I think we have some kind of telepathic connection. I was just about to say, we are bullish weather. And there is going to be the biggest surprise in the next 30 days. That's from our professional opinion. And I want to go over this with your invitation to the special analysis today. So let's go over something that we do very different to everybody else. We look at the magnetics on the planet. You're like, what? What's magnetics? Well, if you think about it, right, the top layer of the atmosphere is called the magnetosphere. Why is that? Because it's a big magnet. And what it's pushing out and pulling in is the solar magnetic energy. I mean, Mo, you've heard about solar flares, coronal mass ejections. It's pretty much a big news stream on Zero Hedge. If there's going to be a big solar flare, and it affects oil, all right, it can cause pipeline ruptures. We even think that the Freeport LNG probability of that explosion was something due to a solar flare. We're looking into that. So basically what we'd have is this magnetosphere going backwards and forwards. And sometimes if the sun pushes out too much energy, like too much of a bam, like a really big like bubble of energy, it can make things really turbulent and really eventful. And I want to go over something which I've joked with you about, right? We call it the Bow Echo Wave Dome. You call it the Doom Dome. And what I want to really concentrate, Mo, is this amount of red. It is getting now so big. And remember, this is July 17th through August 7th. And I get it. We're on the 12th. Like everybody's like, okay, hunky dory. But Mother Nature, Mo, I mean, I'm putting my word on this with 92% confidence. The high pressure dome, which most people are used to that wording, like the high pressure ridge, is just going to blow up. And the reason is because now we have a full connection of all of the atmospheric energy from Mexico into Nunavut, which is up here. And the reason why, Mo, is in the upper 80s and low 90s up here in Eskimo areas. I mean, can you imagine what they're thinking? Like the apocalypse, right? So it's warmer up here than it is in Chicago, but there's this big vacuum and it's just getting sucked right up. Now, where's it going to be good? Eastern Iowa into Illinois. This is going to be now my favorite state for getting rain and thunderstorms. All right, so they are going to be okay. And you can see where the magnetic says that this area is just going to be kind of like Goldilocks perfect, because it's going to have 80s. It's not going to get most of the heat. It's going to get more rain, and I'll show you that today. And so will this area up here, and so will this area. But what worries me is this huge extent of the dome. And I think it's not even, I mean, obviously the future right now is not really being built in because the GFS is flip-flopping on the precip. It's flip-flopping on how hot this dome this ridge gets, but we've been very, very consistent. So what we try to do is, and I said to you in previous webinars, that we've got to be precise. So let's go on and I'll show you a few of the slides. Yeah, go ahead, Mo.
Can I say one thing? I've noticed that heat keeps getting pushed out further and further out. In other words, we were talking about that heat at the end of June. Then we were talking about it first week of July, and now it's July 17th. Do you agree with that?
Yes, absolutely. So what I think you're mentioning is these streams are going further and further east. So it's like getting more expansive. And it's almost like, you know, an engine getting an upgrade. You know, we start by changing the muffler, and then we change some of the dual overhead cams. And eventually we get this vroom, vroom, and Mother Nature is really going to rev up. I mean, look, I'm not bullish for a reason. I'm just painting the weather as it is. As I said to you, our modus operandi at Advanced Forecasting Corporation is not one employee will do any market trading. None. I don't do any, because we just focus on the weather, and that way we don't have a bias.
So Simon,
right, let me go on, Mo. Yeah, go ahead.
One sec. So the Texas heat, that 110, 113, whatever the number is, does that travel into the Midwest?
No, not that 110, but we're going to get 90s. And my gosh, Mo, how did you know what I was going to show you today? Because I've got a new chart showing where the hundreds are going to be. But let me show you this first. This is your big bow echo wave. All right. Now, the general direction is it's pushing east and it's pushing north. You can see that this blue right here for the next week or so is going to be slightly below. All of this darker red is going to be much above. Now, you see this little dot here? That is the center of the high pressure ridge. And it suddenly blossoms after the 20th. But it's going to be in between that. So obviously, you can imagine this is going to be about this size around the 17th, 18th. And then this dark red line, I'm going to focus in on this just a second. It goes into western Iowa, is going to get near 100 Fahrenheit. Now, again, here's the suction valve, right? With all of this heat, record-breaking heat up in northern Canada. And even the Canadian model continues to say that 105-degree readings will get into North Dakota on the 22nd through the 26th of July. What I don't like is all of the Mexican support, which if you look at the legend down on the bottom, it forecasts way over 100-degree temperatures averaging. So you can imagine it's like 85 at night and then like 110 during the day. Here's the map, Mo. I don't know how you knew I was going to do this, but look at this carefully. Let's start with the 95 plus. So this is going to be peak temperatures, and we're reckoning there's going to be 7 days of these peak temperatures from the 17th through the 29th. So that means that not every day is going to be this hot. So it will vacillate, like it just breathes in and out. But look at Iowa. All right, so this whole area means that it's going to see peak temperatures in the mid to upper 90s. But if you take sort of this lower southwest corner, you know, this right here, this is going to be between 100 and 105, right? And you've got Nebraska just, I think, I mean, I hate to say it, but I think people are going to just see, whoa, this is just getting too hot. We're going to see like fires, okay, in soybean and corn fields, obviously, mostly in this area. I don't know if you saw the Twitter feed yesterday. They've got a big drought and a big heat wave coming into the UK, in England. And there was some videos showing corn fields on fire. And last year, Mo, as you know, we called this heat wave over the central US. We said this is going to become known as the big burn. Now, has it come in a little bit late? Yes. So our timing was a little bit off. We didn't think that we would get sort of like all these rains up here. However, it's going to explode. And like I said, this is your 110-degree question. What's this? This is from northern Texas, just outside of Dallas. They'll probably get up to about 107. And then we've got all of central Kansas. And like I said, I think most of the market kind of thinks that this is coming, but hasn't seen it too much yet, but the worst is to come. That's the big news today.
Okay, so Simon, I just want to add that, folks, I don't know if you know this, but temperatures at 105 destroy pollen. So if that 105 is hitting the critical pollination stage in corn, it will do some damage. Simon, I have another question for you.
Yeah,
Maybe you have it on the next slide, but how much precipitation is going to come into this when it's really hot and dry?
Okay, great. Let's go into that right now. All right, so here's the precip. All right, so let's focus in on this area right here with the deviation. So if it's white, Mo, and everybody listening, greetings to you all. Thanks for coming on. If it's white, it means it's normal. All right, so notice the division here, right there. If it's to the west of that line, we are going into moderate, possibly heavy stress, especially when we get into Nebraska. But if we're in easternmost Iowa into Illinois, this area, hopefully you can see this. I'm going to zoom in on the next slide, but that is going to do fine. All right. In fact, Illinois is going to do probably the best. It's going to be probably one of the best states for yields. But all of this, I mean, is just going to get hit so bad. And of course, going into Missouri too, and crops in Arkansas too. So, but look at this, Mo. This is week 2, and the heat wraps around into the upper Midwest. Now, it's not going to be 105, but we are going to see a huge coverage of 90s from, let's say, the 21st or 22nd through the 3rd of August over much of the Corn Belt west of this line right there. So if you draw a line here, and I'll do it carefully, all of that is going to be 90s plus or 100.
So you're saying eastern Iowa to Illinois is going to be above normal precip, but everybody else is going to be below normal.
Exactly. There'll be a little bit here in the Red River Valley up here north of Fargo, which will be okay. But even the Great Lakes is drying out.
Right. Yeah.
Let's go on to the next one. Permit me, Mo. I know we've only got a small amount of time. What I wanted to do is show everybody where the moderate stress is going to be and where the heavy stress is. And you can see, I just want to make this easy. Yellow is moderate stress. Heavy stress is in brown. And you can see outside of that yellow line. So you've got basically here is all good, but it's such a minimal area. Okay, if you're in Peoria, Illinois, you're going to be loving it. But, you know, if you're in, you know, Chamberlain, South Dakota, or if you're in Alliance, Nebraska, going down into Concordia, Kansas, you know, up here in, let's say, Fort Dodge, Iowa, it's all going to get moderate stress at least. And I think that even with all my emphasis here, we might be a bit conservative on how bad the change is going to get.
But Simon, don't you think that the yields in the I states, Iowa, Illinois, Indiana, that doesn't look threatened will more than offset the yield drops in the Western Corn Belt?
That's the big question, Mo. And I'm not an expert in sort of, you know, making this, right? So I'm not a commodity analyst. What I can say is, point blank, the Western Corn Belt is going to get 3 notable whammies. The Eastern Corn Belt is going to get far less. And let me say those 3. The first whammy is the hot, dry weather that is coming. The second whammy is the derechos and hail, which I'm going to get right into now because I wanted everybody to see this up front. And the third one is early frosts.
Okay.
So we've got to sort of jump through these hurdles, and whether that offsets it. I mean, look, we've said the areas in here, right, are going to be probably 11% above normal yields, but these areas, all right, are going to be up to 15% below normal yields. And you may say, well, that's going to even it out. And, you know, we have to obviously population weight it, so to speak, with the yields. And, you know, maybe we come out, you know, in the, you know, I think we've got somewhere around 160, which is just fantastic, right? Nobody's seeing that. But we've got to, you know, after the professional analysis, and that's what our number gets. I can't then fudge it and say, well, everybody else is predicting 180 or high 170s. That would just be a copycat syndrome. I mean, every man, every lady has got to put his nose on the mark of what they're predicting. And I'm saying there's enough bullish weather this year, and we've hardly even touched summer yet, right? So we've got to go through all of these events, even into the fall. And I'm just saying, from a professional weather viewpoint, there's a lot coming.
But Simon, aren't those dry areas going to get timely rains?
They will in August, but then it's going to get too wet. And we're saying that there's going to be too much disease. Let me go into that. First, let's show you the long range on July. So there's a lot going on here. Let me show you first the pink areas, because I wanted everybody to know, you know, this is the hail derecho threat that is going to be above normal. Now, obviously, you know, just south of Chicago, in that area that I just showed you, that's going to be okay rains. I think it would probably be around Peoria. There's going to be some hail and derecho threats, because you've got this heat coming on in, but you've also got the cooler air that's also settled with all of the negative ions. So you're going to get that clash right there. There's also going to be a clash coming down the mid-Mississippi and lower Mississippi River Valley. But look on the left, Mo, where this 100 is. Between the green and the yellow, that's normal rainfall. All right, so right here is normal to above. Anywhere really in the pink is normal to above. But you've got this huge area in July, and especially the second half of July, that's just going to get moderate to heavy heat stress. But let's go into August, and you can see the big difference answering your question. First of all, the hail derecho threat is much bigger, especially in the Western Corn Belt. There'll be some areas going into the Appalachians and some areas going in the Deep South. But the main threat, again, is the Central Plains going into probably even Southeast Iowa. And you'll notice that these blues here, okay, correlate to this much above normal rainfall. So you're right, there is going to be rain coming down in the second week of August, but it's going to have much cooler air,
right?
And then it's going to just repeat itself.
So
Simon, you know, sometimes when we pray, right, we ask for rain. Sometimes we don't specify how much we want, and we get too much.
Can you explain why we're having more hail damage, more derecho, more wind threat?
Yeah, it goes back to the magnetics, Mo. Yeah. In the magnetosphere, there's like pores. You know, like our skin. If you take a microscope, right, you'll see all the pores. And some people have really moist skin, and you can actually see the pores. That's actually our biggest organ of the body. It's a trick question. You know, some people say, well, it's the heart, the liver. No, it's the skin. On the Earth's skin, there's pores. And that's called the radiative balance, right? Let's in the sun during the day, it warms up, and then it cools off by letting the heat go out in the atmosphere, right? Radiative balance. The problem is it's the pores are freaking closing, Mo. I mean, I get passionate on this. There is technology doing this, right? We don't have time to get into that right now. There's changes in the sun. There's chemtrails, right? And what they're doing is they're closing those pores up, so it can't breathe like normally. And if I smother you in creams and sun lotion, which is actually toxic for you, right? You can't breathe right. And that's what's happening. That's the bottom line truth of what's going on. And when you close up these pores, Mo, you are going to get vigorous action in the atmosphere, because Mother Nature's like, she can't breathe, and it's like a fever. So you're going to get extreme events.
Where does that hail and derecho, where is it concentrated? Is it the same path? Nebraska, South Dakota, North Dakota, Minnesota, is it that same path?
Yes, except Minnesota probably won't be getting the hail derecho threat. It's going to be more sort of skewed southeastward, and it'll be coming in line. So you'll get this like this lifting motion, coming up, as you just said, into the Dakotas, into Nebraska. Nebraska's probably going to get pounded. That's going to be probably the worst state. In other words, Illinois will be the best, like plus 11, plus 16% above normal yield. And then Nebraska will probably be as bad as minus 22%.
Okay.
So let me just go on. I think I've got one or two more slides. No, that's it, Mo.
That's it. Okay, so
Yeah.
folks, I just, Simon, thank you very, very much for all that insight. I'm going to leave you with two final summaries. One is I experienced last year's tour. I traveled through the Eastern Corn Belt and they had tons of rain, moisture, flooding, holes everywhere, look like Swiss cheese. But that disease never showed up anywhere. The USDA never told anybody that. So I'm concerned about disease because the USDA may reconcile next September in the quarterly grain stocks report in September of 23.
By that time, it's too late, right?
It's too late, right? So that's where I get when I say they're sending the wrong signals.
Yeah.
They never
No,
tell
you got
us,
a good point there. You got a good point.
Okay.
And look, I think the USDA is politicizing some of this. We've seen that in the past.
Correct. My last summary and comment is this. I've made a mistake the last 5 years thinking that Mother Nature is doing damage to crops, but we underestimate the hybrids and technology. They can do more with less. And even though you got that hot weather coming in, Simon, maybe you got less than normal precipitation. If we can get through the next 2 weeks with that hot, dry weather you're talking about, and then you bring in that cool August rain, that August rain probably is going to save the soybean crop.
Yeah, there's definitely going to be, and we've talked about this, haven't we, Mo, that there's going to be this bearish kind of dip where once the rains come in after the heat, and that's going to be like in the second week of August, they'll be like, phew, that's great.
And your frost outlook is very bad for Western Canada. 60 to 70% of the crops are delayed, late planting. It's worse than that heat dome from last year. It will destroy those crops. So if you're from Western Canada, be careful how much you pull the trigger. The best thing for you is to protect the price with put options.
Yeah.
Okay.
Yeah.
I do
and
not
I'll tell you
want
something, Mo.
Because I don't want you buying out contracts for a third year in a row.
Yeah. Yeah. And here's $1 million advice line. You ready for this one? This one you haven't heard of. Guys, if you're in Canada, if you're a Canadian rancher or farmer, you know what some of the best things that you can do investment wise? Put 10% of your asset down here in Uruguay. Okay. You can have your cows all managed. You can have crops down here because it's just going to get colder earlier than usual. You're actually going to be stormier and windier than usual going into 2025 because we've got the 89-year drought coming. And I tell you something, it is going to get more extreme. You're going to have more extreme events if you're in Canada. And the Canada economy is going to suffer from this going into 2025. Mo, that's our long-range investment advice. So thank you for permitting me to share that with somebody.
We do have one last question. This is from Mitchell Morowitz. He's from Ontario, I believe, or maybe Michigan. What's the fall frost outlook for Great Lakes, Ontario region?
Yeah, so that's going to be okay because what happens, Mo, and let me show you this real quickly with the annotation here on my little map so that I can answer the gentleman's question correctly. In August, the Bow Echo wave moves into the east. So what happens is you get the flow up the Appalachians all into eastern Canada, and it's going to be much warmer than usual. And that will last through much of September. So the frost threat is basically in here, not over here. So that will be okay.
All right, perfect. Guys, any last minute questions for myself, Simon, or Mark? Oh, we do have one more. We got, no, I guess Mitch said thank you. So.
Oh, good, Mitch. Thank you for coming on.
Yeah, Mitchell. Sorry, Mitchell. It's not Mitch, Mitchell. Anyways, folks, it's been a pleasure. We've recorded it.
Yeah.
So if you want to go back and listen to it again, when you have more time, feel free to do that. Have a great week and stay cool if it gets hot. Guys, Simon, Mark, thank you very much.
Thanks for having me.
Take care.
See you guys. Ciao.
ya. Simon, are you still there? Well, so Perry, I'm still on the call. I can answer the question because I know that Simon mentioned this. So Perry Chapman's asking, when will the frost corn in Manitoba? He's looking for cool weather, first week of September, and that frost to really hit hard sometime in that third week. Thanks, folks. Take care. Bye for now.